You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, what are we seeing for futures?
Well, we're in a mode where we'd seen futures come up, rise higher across the corn and soybean futures, especially, and even a bit on wheat over the past 1 or 2 weeks. And now we seem, for the last several days, to have topped out. And a number of factors involved in that we'll talk about today. Weather issues down South America, uh, the threat, and then hopes that trade tariffs changes aren't will either will or will not impact the markets, and and also just I guess ongoing challenges in understanding the local cash situation. Again, we had talked about last week, I think, the on parts of Kansas, although the futures have gone higher, that we still have pretty weak basis, and that there apparently had been quite a bit of sales of grain earlier on, and at least at this point, users still fill full up with supplies until sometime out into spring and May. In fact, you go back and look at the last grain stocks report for corn in Kansas. I think 22 or 23% of the grain was still on farm. Everything else is in commercial hands. So it would make sense given those numbers how that situation could come about. So we've been looking at that, and on the I don't see on the futures markets at this time any surprising carries that we haven't been seeing. However, you do see from the March corn contract that closed at 490 and a quarter yesterday, and from up to May at 501 and a half, you see that's about five and a half or 5 and 3/5 cents a bushel, and that's not too bad. Uh, but then that carry falls off to about 1 cent a bushel going to per month, May from May into July. For soybeans, you still have from the March to the May contract and May to the July contract over 7 cents a bushel per month carry. So I don't know how many farmers are still going to be holding those crops long term. But those that are, you've got some carry there, and maybe something worth considering in terms of a storage hedge of some type. And for wheat, you do see a close. We saw a close on Thursday of 588 and a quarter on the March contract, May at 598 and a quarter, in July above $6 up to 607. And you see carries of five to 4 and 3/5 to 6 cents a bushel a month, and those carries extend all the way out to December. So we have some issues happening in the world markets. We've been talking about South America for the most part with regard to corn and soybean impacts, but there are concerns in other parts of the world that are affecting the wheat markets as well. I would say that of the in the last few days, if any of these commodities has moved to the higher side since we spoke last a week ago, it's probably been wheat. And in a way, wheat's been struggling so much that's kind of a surprise. Some of that comes back to really some pretty a strong week of exports. So I guess if the prices pardon me, if prices on a commodity like wheat in the U.S. move low enough, it'll attract buyers, and it did. You can see that in the hard red winter wheat export numbers, as well as the hard red, well, especially the hard red numbers and hard red winter numbers, and so that's a welcome sight for Kansas wheat growers to see the commodity start to move in the area.
What are we seeing for cash prices?
Some surprising things that when I looked first at the ethanol markets, ever since we've been talking about gray market, Shelby, on this program, we've said, well, gosh, it seems like Kansas is always the uh, strongest has the strongest price for corn going into ethanol plants, and that other than 1 week, I think that I've talked about this, we'd seen that occur. Well, now you've got a situation where in the Eastern Corn Belt you actually have stronger prices in Ohio than you have in Kansas. Average price, well, price range of 487 to 504. In Kansas, 479 to 502. So Top end price is a little bit higher. Average price 493 in Kansas, 496, 497 in Ohio. You look at the weather maps, it's dry in Ohio. So I don't know if that's necessarily the issue that's driving that. Of course, it's an ethanol driven bid, so we'd have to look probably closer at the ethanol prices back in that part of the country as well. But I don't know if correlation makes for causality, but there are parts of the Eastern Corn Belt that are just pretty dry, and that probably could play into the psychology of those of the bids that are occurring. Would also say uh, the here in Kansas, we've watched for a long time the corn basis in Southwest Kansas as the bellwether of the state, and that just it continues to weaken. The cash price of 505, which isn't necessarily bad, but that's only a 15 over basis, and we've been seeing 20 and uh, 20 in recent weeks, 40, 45, 50 in most of the time the last few years. In the uh, driest of years, 2 3 years ago, we saw a dollar plus $1.60, et cetera. So now we're down to about 15 over, and that's a change, and either due to this issue of everybody being full up on the one hand, or the affordability of wheat as a competitor in livestock feed rations. And you still have a ratio of wheat prices to cash wheat price to cash corn price. They're in Garden City with the cash wheat at 518, corn at 508. So you have wheat only 3% over that of corn for the cash price in that area. And of course, we can feed it down there. It's got the cattle, got the livestock to do that. And normally we look at 105, 106% as the break even. It wasn't 2 or 3 weeks ago that price ratio was more like 96% or 97. So you could see some wheat demand in that local area coming in and starting to move that more towards a neutral situation. But I guess that's the way markets work. And that when we have an opportunity to buy something at a good value, we tend to see demand come towards it and then tend to take that opportunity away. So we'll see where that goes in coming weeks.
Dan, you mentioned South America and wanting to make a note on their weather and the Black Sea region as well when it comes to their weather also.
Yeah. Overall, if there's an underlying quiet issue happening out in the gray markets, it has to do with dry conditions in parts of Argentina and southern Brazil, and some wet conditions that have delayed harvest of soybeans elsewhere in Brazil in particular. Those delays in soybeans being harvested are also delaying the planting dates for their second crop corn. So that's at issue. We have if you go online and look at the weather maps that we put together for our KSU Ag Today market information on the Ag Manager website, you can see, gosh, it's pretty dry in parts of Brazil and Argentina, and we're not talking about La Nina very much here, but analysts down in that area are saying that are really talking about, or I guess uh, putting the blame for this for what's occurring on the remnants of La Nina. So we'll see. We're supposedly in kind of a neutral or weaker La Nina, but and not a lot of talk about how that could affect the U.S., but it's still having an impact down South America. And in the Black Sea region, you get conflicting reports out of Russia, which isn't surprising with regard to the grain markets. But on the one hand, I've see an credible article talking about how Russia may lose world leadership in wheat exports, and that grain exports are to drop 20% in 24-25 due to bad weather. Then in the next breath, almost on the next day, you see, gosh, more than 80% of the wheat is good to excellent. Well, it's hard to really pull this apart in terms of what's being said, but it might be framing, positioning in the markets, and a difference of opinions. But either way, there's enough quote smoke there that problems in that part of the world are at play to probably help give us some of this price increase that we've seen in the wheat market. And again, we had a week for hard red winter wheat. We mentioned that a little bit earlier. 6 million bushels of shipments. We need about 5.1 million to meet the USDA's projection. And this is about the first week in a good long time in months that we've actually had such a strong week of hard red winter wheat movement, actual shipments. And so for hard red right now, we've got uh, here we're 34 weeks into this market year, about 65% of the way, and we actually have shipments and sales at about 74% of the way to this 210 million bushel goal that USDA set. So we've been bemoaning the hard red winter wheat market in the United States and in Kansas in particular for a good long time. And now, I guess if you wait long enough, that again international conditions come into play and start to bring buyers back to the U.S. And again, the issue with the U.S. is that we can store wheat, we can finance the storage, we can ship it better than many other countries. We're not under the gun or under pressure to have to sell it quick to generate cash, so we can hold this at interest cost. And and when these other places that do have to have quick force sales start to run out of supplies, then here's the United States. It's a matter of, though, if being patient enough or being forced to be patient enough to wait for the situation every 1 or 2 or 3 years where we end up in our residual storage storer status and can take advantage of it. So we'll see where it goes in coming weeks and months, but right now it looks like things are turning a bit towards the U.S.'s favor on wheat exports.
Dan, I appreciate you taking the time to join us once again and give us our grain market update.
Thank you so much, Shelby. I appreciate it.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you up ahead.